Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday, June 19th, 2013. Looking at some U.S. markets today, maybe a few others. Main thing today will be the Fed. I talked about gold yesterday, so I won't cover that, but it's down as of last time I checked today, about 18 points. That's in line with what we were expecting. Looking at the Dow Jones Industrial Average in anticipation of the Fed, you saw the move to the upside here. Let me get the tools. You saw this move to the upside here, but what really happened when you had the news come out, and even though they stated that they were going to continue their bond buying program, the $85 billion a month, the real story is what they stated in what Bernanke stated in May, and that was that they could taper over the next few meetings if the economy improved. And with that statement that we had today, basically they're seeing that happening. Ergo, people are anticipating, yes, that they're going to still continue to come to a tapering theory over the next few meetings. And so this meeting wasn't really about whether or not they would stop or taper now. It was about whether or not they would see the markets as being conducive to tapering of their current QE. And so that's what's going on. That's why you saw the market down 200 points today. Looking from a technical perspective on the Dow Jones Industrial Average, you saw we had this massive move up here. We get a big fat sell signal at this point here, marking the high. When we come down, we find some support here. We bounce, test the high, fail. We hold the support. We get a sell signal at the support, and then we break below that. Now, this little support zone here, whenever a support is broken, it becomes resistance. And so you tested it once and fell away from it. Tested again, fell away from it. Got a sell signal at the 50. It's important to note. And then we come up here and test it a third time and fail away again. So right now, all you see is the bears are still very strong at this level and holding that ground. There's no reason to be bullish here. I'll be looking for a test of this 50 period again, and that would be in line for looking at today's candlestick formation for tomorrow, because the candlestick formation just shows complete sell, and there's no desire to buy in today's candlestick formation. So obviously, I still maintain my bearish perspective here. Nothing has changed. The way this moves right now, you can still see some sideways movement activity. So to say that now is the time to sell, it's going to break down, I can't do that. But I can look at this and say there's a couple different points to point out. This low point here, you get a close below this uptrend line, you're probably going to come down here and take out this level at that point. So keep an eye on that. You could start to test it tomorrow, get a little bounce off that, and then do different things. But if you come down here and you close below that line, that'll be very important. It's a technical perspective. Again, it's a short-term one, so it's not all that important. Don't pay too much attention to short-term trend lines, but it is one thing that short-term traders, day traders, will be looking at tomorrow. Before we look at the longer term chart, I want to point out that the big move to the downside in the Dow Jones, down 206 points by the close, that's going to probably be seen globally as well. So look for selling tomorrow, and also we'll have some sell signals on the free website at PerfectStockAlert.com on the individual charts. I'll show you where to find those in a moment, but there will be some on Europe charts as well as probably a couple others, Japan as well. Okay, taking a glance here, looking at the 2-year weekly chart of the Dow Jones Industrial Average, there's a few things to note. First thing, this particular candlestick formation has not finished forming. It's Wednesday, so we still have 2 more days of trading activity before we get something that will be actually concrete, because obviously the candlestick will form all the way until Friday's close. But right now, looking at the candlestick formation and anticipating we're going to see more selling, then you look at this and you can say that we have another sell signal forming on that current chart, and that's again very important. You're seeing a sell signal here and then another one forming here. This is not going to hold, and so you'll be looking for this to break to the downside. You're looking to test this 50 period moving average overnight. Really easy to do that. And then also I want to point out, if you go down and you look at the MACD and the MACD, you can see that we already have the bearish cross there, and that's something I've been talking about, warning about for a while there. When these two items cross, they typically are showing, or they are showing, a decrease in momentum to the upside, and that is what happens before you get your sell-off, which you've seen in the past as well here, and then here as well. Here's I don't know if you can even see that, but anyway, there's a shooting star signal up there as well, and then over here one that happened prior, and so forth and so on. So this is something that would be indicating to you that there's a big move still coming. We have not seen the pullback in the U.S. markets just yet. If you are a Dow theory trader, then you will be looking at the Dow Jones Transportation Average to get confirmation of the bearish bias that I have on the Dow Jones Industrial Average. And you can see right here that you have a very bearish shooting star signal here, which is a sell signal, confirmation the next day with lower low and lower high, all that makes sense. Now, there's a couple things to note about these shooting stars. You can have them in cases when you have a run up here and you get one like this. The following day, you can see some test of the high and then move lower. You can see in this particular case here, there was no test. You simply started moving lower. That can happen. And then there's another way where you will have the sell signal, and then you'll have a couple of days of kicking, sideways moving activity, this and that, and then you'll see it start to break down. The main thing is that if the high is not beat, if you can see price does not come above that point, then there's nothing here. It's still a sell. Nothing's changed. And so that's important to note. In this particular case, we still have a sell signal on the Dow Jones Transportation Average. We have the same thing developed on the Dow Jones Industrial Average. Again, across the markets, all we're seeing are sell signs. Quick glance here at the Japan iShares, the EWJ. I've also looked at the Nikkei, and you can see that it's a very, very weak, probably the weakest kind of bounce you could possibly look at on that chart. And this one, obviously, a little bit more of a divergence here, but the same basic overall story is being told here. You can see that we broke down substantially at this point, and this is the point that's important. If you close below the 50-period moving average, which you did here, that's indicating a bearish move here. And then when you come up here and you find resistance at that point, it's confirming that. And you see we close below it here, and we come here, we find resistance, and we're selling off from it. This is where you find the best entry opportunities for a short trade in a downward moving market, a bearish moving market. You're also getting confirmation by the ultimate oscillator, which typically peaks out at the 60 line whenever you're in a bearish market. It means the momentum to the upside is very, very weak. Momentum to the downside will be stronger. Therefore, you look for something like this to come down here and fall below the 30 line. They'll be taking out this previous low here, and so forth and so on. So I'll be looking for price activity to come down here, take out this low, or at least test it. I wouldn't anticipate taking it out, but still anticipate the move to come down lower and take out that low here. The main thing here, down, up, down, lower, up, down. So we're in a downtrend. Quick glance here at the NASDAQ. This is a really good picture of what the U.S. markets have really been doing for the past couple of weeks, and that is just sideways moving market activity, just kicking, if you will. We're not really breaking down here, definitely not following the overall global markets lower, which many of them have already taken out this low way down here. So this is still a move that's waiting to happen. It hasn't actually happened yet, and so it's important to take note of that. We're still short this position here, so it's nothing for us to do here other than maintain that short position, because that was the last signal we received, was a sell signal, and we're finding resistance very strong there. That's why you're not capable of taking out the previous high. That's where our stop is set. Continue to watch this. Sideways movement activity is fine. If you want to be bullish, you will wait for a particular signal, a close above that line. If you're going to be looking for confirmation to the sell side before getting that way, there's a couple different ways you can do it. You can draw a line off this low point here and here. Simply use that little short-term time frame there, and you get a close below that. That would be fine. Another way to do that would be simply draw a line like here. Say this is a channel. We're doing this little number here. When you can get a close below that channel, then you can start selling at that point in time. However, keep in mind that as markets develop, the U.S. could play a game of catch-up and move very quickly much lower. So it's important to keep an eye on this. Another thing to point out, when this does break, you simply measure this distance out here and say, okay, well, that's the distance that we expect to the downside before you can get some kind of a hesitation or a bounce or anything of that nature. It could be down here. So this is something to keep an eye on. Again, it would indicate you're going to be testing this low here. Quick glance here at the Russell 2000 Small Cap Index. The same basic overall chart formation as far as the sideways moving activity goes. We're just taking this time, moving sideways here, testing and failing and moving lower. There's nothing going on here other than sideways moving activity. The main thing, though, this high point, of course, and then, of course, these low points. This is the channel that you're in, and then when you break that to the downside, anticipate that distance out the other side. We'll be testing the previous low again. Also, to point out, look at the ultimate oscillator, what it's telling you. Peaking out at the 60 line. This is important. It's indicating very, very weak market condition, even though you're moving sideways, and it's we anticipate a break to the downside in that environment. Quick glance here at the SPX, or the S&P 500 Large Cap Index. Let's point out the obvious. Okay, the ultimate oscillator peaking out at the 60 line, which happens in bear markets. Be looking for this to move down here and get below the 30 line. That would require price activity to do the same, get down below its low point as well. If you're going to be taking out low on the ultimate oscillator, indicating momentum to the downside is increasing, therefore you would anticipate price to follow suit. There's a couple of trend lines to pay attention to. This one I'm currently drawn here would be one that short-term traders can be looking at, and again, that's in line with this 50-period moving average close below that line, and you'll be getting a bearish signal. Again, you'll anticipate at that point, you start finding resistance at that point, and you start looking to move down here and test this low. For those of you who be looking for my personal charts, short-term or long-term, remember the long-term are important. You mean watching those for the shooting star signals that are forming in U.S. markets right now. You can go here under the market charts or the market section here. You can watch that in the market videos, of course, and then below that will be the market charts. It's my personal charts, and they're updated nightly. We have new sell signals on many of them as well. Okay, so God bless. Take care. I will see you in tomorrow's video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.